assessing a company's financial health, I think the first where I start is the nature of the business, because many times if one doesn't understand how the business earns, then it's really difficult to assess true health. For instance, one may look on a business with seasonal revenue and look on the months when they're not earning, if one isn't aware of what the business does, and says, oh well, the business is struggling despite the fact that they may earn at 5 points of the year rather than 12. So what I would say firstly is to understand where and how the business generates revenue. But in a typical sense, you'd want to look at, again, we have to make some assumptions. So let's assume it's a manufacturing company. For argument's sake, we'd want to look at the efficiencies, meaning the extent to which it retains, or the amount of cents it retains on every dollar of revenue. You may want to consider the assets, may want to consider the debt, the extent to which it's able to manage this debt. But then at the same time, you may have persons saying, well, debt is bad, but that's not necessarily the case, because you may have businesses that are able to drive their revenue at a much faster rate than the percentage that they're paying back or servicing their debt at. So there's no one precise method. Of course, standard-wise, you want to look at revenue growth. You'd want to look at the capacity of the business to service its debt, but it's a very complex mechanism to assess a business, and I wouldn't want to just put it out there like it's just a simple straight line thing. But let's just say revenue growth and debt management or servicing ratios for the time being.
Looking at things like company's reputation, brand strength, customer loyalty, the management team you have in place. It's not just about numbers now. You have to look at other elements as well to ensure that it's a full team and a full package. Balance sheet strength is there. You also have the people in place to actually pull the business out of difficult times and pivot against what they have now and move into other areas.
At this point in time, there are two things that come to mind. One, risk profile, and two, return horizon. From a risk profile perspective, our clients really need to think about where they are in their stage of their career and their lives. And are they prepared to undergo a continued correction of the markets? Because depending on where you are in life, you may or may not be in a position to do that. Depending on whether you're a fund manager and you have limits within your portfolios, you may or may not have the choice but to rebalance your portfolio because of the changes that we have seen so far. In Jamaica, a 26% decline year to date is a material amount of losses so far. In the US, you've seen funds have to rebalance their portfolios because of various limits, and certain sectors have gone out of balance. So that's one aspect. From a return horizon perspective, though, if you believe that you are invested in a company that has a solid long-term future, if you have gone through and done what Ryan said, look, truly understand what the company does, what its line of business is, what are its lines of businesses, how is it going to be impacted by a world in which social distancing continues to exist. Is it going to benefit from such a situation? Is it going to be neutral, or is it going to be challenged? If the world changes, and we do have a glimpse of how the world is changing, how will that company fare in the future? And if you believe that there are opportunities when you take a look at that company and where it is priced today versus its outlook for the future, and you have an appropriate risk return horizon for your investments, then you may find yourself in an opportunity where you can actually create a lot of wealth for yourself at this point in time. So, I'm encouraging people to speak with their investment advisors at GK Capital, speak with the team at First Global Bank, and really get an understanding of what opportunities exist out there, and take a look at the market, because it's at times like these where investors really are able to create wealth for themselves.